I do have concerns that we're on our way to a recession, right? Because you've seen the GDP now collapse from 4% to minus 2.8. So arguably we're going to have a little, ugly setback in growth. Ultimately, I think we're in a place where the response is going to be massively good for Bitcoin. Right? We're going to have to cut rates. We're going to have to increase the money supply back to high single digits, maybe even low double digits. And in that world, one Bitcoin's one Bitcoin, but we don't price in Bitcoin, price in dollars, so the price is going to go up.
Mark Yusko begins by highlighting the alarming downturn in economic growth. The U.S. GDP, which was previously estimated at 4%, has now plummeted 2.8%, signaling a significant contraction. Meanwhile, Germany is already in a recession, and Europe as a whole is teetering on the edge. Japan has been in a persistent state of economic stagnation, and now the United States is showing signs of joining the downturn. This decline in economic growth is primarily due to a slowdown in global trade. Yusko emphasizes that when global trade dries up, financial stress increases, leading to more margin calls. In the short term, this can have adverse effects on asset prices, even for Bitcoin, despite its strategic reserve status. However, Yusko remains cautiously optimistic, believing that Bitcoin may hold steady given its unique market dynamics.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Germany's already in recession. Europe broadly is close to recession. Japan's always been kind of hovering on recession. We could be in recession. That's bad, and that's because global trade is drying up. Well, if that happens, there can be more margin calls. And in the short run, assets, even like Bitcoin, despite the strategic Bitcoin reserve, it could go down. I don't think it will because Scott Bessent said this yesterday on TV. He said, we're going to get interest rates down because we can't refinance the debt. Why are interest rates going up? Remember, the Fed started cutting last year. So why did the 10-year rate go up? Because China's playing go. They're selling their treasuries, which they had been buyers of treasury. So when there's lots of demand, then yields go down, prices go up. When they start selling, prices go down and yields go up. And so everyone thinks, Trump's right. Trump's saying is right, which is trade wars are easy to win. No, they're not. They're never easy. And there are no winners, right? There's just losers. And so China, I believe, is winning. And look at Chinese stocks. They're going straight up. Baba and smart investors like David Tepper and Michael Burry own a lot of them, and we do too. But ultimately, I think we're in a place where the response is going to be massively good for Bitcoin, right? We're going to have to cut rates. We're going to have to increase the money supply back to high single digits, maybe even low double digits. And in that world, one Bitcoin's one Bitcoin, but we don't price in Bitcoin, price in dollars, so the price is going to go up. I think it's a short-term reset. I don't think we're going into a depression. I don't think it's 1929. There were a lot of tweets on Monday night, that Black Tuesday was going to happen yesterday, and thankfully it didn't. But look, the valuations are such that we could have a really meaningful, long, drawn-out, like 10 years of no return in U.S. stocks. That would not surprise me. But I don't think it's like down 2% every year for 10 years. I think it's probably a flush and then a response and then a comeback. Because again, we're the last 2 years of the boomers, and we still got, a decade before we can take our entitlements. So you got at least another 10 years where you got to prop up that generation, because all of our wealth, the boomers, is in real estate and stocks. So you can't let those two things go down. And my guess is they won't. And so even if there's a short-term flush, which they're probably, Stevie Cohen's, pretty smart guy, I think there will be. Economic data are pointing to it. Leading economic indicators are pointing to it. So all that said, I think it will be short-lived because I think the response from the US government and mostly from China. China is firing the liquidity bazooka like we've never seen because they can't afford to have what happened to Japan happen to them. Because Japan, remember, in the 70s and 80s was the economic miracle. They were going to take over the world. We would send our people over to study under Japanese companies. And then they had a deflationary debt collapse and they've been, moribund for 30 years. China can't afford that because they got too many people. So they are printing capital and they're in a different position. They have more reserves. They have the largest reserves in the world, over $3 trillion. And so they have the economic power to recapitalize their banks, to, sweep the bad real estate stuff under the rug. Investing is all about taking risks that you're compensated for. If you avoid taking risk, you're not investing, right? Investing is about taking risk, but don't take risks where you're not compensated. Like buying stocks at 40 times earnings, maybe you're not being compensated. But buying stocks, like Alibaba, where it was trading at 8 times earnings, that you're being compensated for that. So investing is about taking intelligent risks that you're compensated for.
Yusko believes that the macroeconomic response to a potential recession will be extremely favorable for Bitcoin. In his view, the U.S. government will be forced to cut interest rates and expand the money supply. This expansion will likely push monetary growth back into high single-digit or even low double-digit territory. Since Bitcoin is priced in dollars, an increase in the money supply will drive Bitcoin's value higher over time. Although some fear a prolonged economic downturn, Yusko does not foresee a 1929-style Great Depression. Instead, he envisions a period of market volatility where equities may experience a significant correction followed by a recovery. Given that the baby boomer generation still holds substantial wealth in real estate and stocks, policymakers will likely intervene to prevent a total market collapse.
Investors and investing has always been the same, right? Everyone should have 3 buckets. You have a liquidity bucket that funds your lifestyle, 5 to 15% to pay the bills and pay the rent and travel and food. And that needs to be liquid. It needs to be high quality. It can't have lots of volatility. That's your liquidity bucket. Then up here, you got the 10 to 15% of the get rich bucket. And that's where I always say that's where you're doing the friend's condo deal, the brother-in-law's venture deal, the hot stock tip you got. You're going to lose it all, so keep it small. No, I'm just kidding around. But that's where you put, things that you think have big potential to return lots. And some of them go to 0, but that's okay because that's where you take your big tail risk. Then 70% is in the stay rich bucket. Well, you say, well, what if I'm not rich yet? Well, then you got to have more in the get rich bucket, plus your income and plus your, you want to get some passive income. So, but that stay rich bucket, 70%, that needs to follow, the endowment model, right? Which is a diversified portfolio of high volatility assets. And the younger you are, the more volatile, right? That are uncorrelated. Like, I believe if you're under 65, it should actually be against the law to own bonds. Like literally, it should be against the law, especially in your 401k, because you can't touch your 401k until you're 71 and a half. So why would you put bonds in there? You should have venture capital and real estate and commodities and Bitcoin and all the most volatile things because you can't touch it. Bonds are for the liquidity bucket to spend, nothing else. So in the stay rich bucket, you want to have an equity orientation, but equity doesn't mean stocks. It means private equity, real estate equity, commodity equity, stock equity, digital assets, not equity, but digital assets. Bitcoin should be a meaningful piece of that portfolio. Why? Well, because it's the perfect asset. It has 80 vol, which means it has a long-term high compound rate of return. Right? It has the same vol as Amazon, and yet it has twice the compound return. Now, it's only been doing it for 16 years instead of 30, so Bitcoin's number will come down, and they'll probably have the same, but they have the same vol. I use Amazon all the time. Amazon, every year for 30 years, has had a double-digit drawdown, including this year. It's in one right now. When was the right time to sell it? Never. But who bought it on day one and held to today? 5 people: Jeff, mom, dad, ex-wife, Bill Miller. That's it. Because everyone gets shaken up by the volatility. But the beautiful thing about a stay rich portfolio, by having uncorrelated assets, why Bitcoin's so perfect, why Amazon's so good, they're not correlated with one another. Bitcoin is 0.0 correlated to bonds and 0.15 correlated to stocks. So every time you add it to the portfolio, your risk goes down. Like Harry Markowitz. And I was lucky. I got to study under Dr. Markowitz at University of Chicago. He won the Nobel Prize for the most genius thing of investing there is. The riskiest thing you can have is cash. The dumbest asset you can have is cash, because every day you hold cash, it loses purchasing power. Now, you want to have some to pay for lunch or pay for dinner or pay for your rent, but anything above some is bad. So how do you fix that? Well, you can add bonds. Well, bonds are riskier than cash, right? But the risk of your portfolio goes down because you're not losing to inflation as much. Well, then what if you add stocks? Well, those are riskier. Yeah, they could go down, they could lose, but the risk of the portfolio goes down. When I add venture capital, risk goes down. Add real estate, add Bitcoin, add any asset that's uncorrelated, the risk of the portfolio goes down. Your return per unit of risk, the Sharpe ratio, goes up. So that's how you want to think about investing. The younger you are, the more heavy into the highest volatility assets, venture capital, like, again, innovation. There are 4 assets that you can own: stocks, bonds, currencies, commodities. That's it. Mark, what about hedge funds? Hedge funds are a type of holding, like a mutual fund or a private partnership. You can own stocks, bonds, currencies, commodities. What about private equity? I own a common stock, a preferred stock, or a convertible bond. What about real estate? I own the commodity, the land, or the equity, or the debt of the deal. Stocks, bonds, currencies, commodities. That's it. But those 4 things are created by the 5th asset, innovation. Without innovation, none of that other stuff exists. So you want to have exposure to innovation, to new ideas, to agentic AI, to blockchain technology, to decentralized exchanges, to all of the things. Basically, when someone tells you that only the bad people are using it, buy a lot of it. If people tell you it rots your brain, buy a lot of it. If people tell you that it has no use in normal society, buy a lot of it, because those are the things that the current generation doesn't understand. And when you add those to a portfolio, your portfolio gets better.
Yusko emphasizes that all asset classes, stocks, bonds, currencies, and commodities, are driven by one fundamental force: innovation. Without innovation, economic growth stagnates. He encourages investors to seek exposure to disruptive technologies such as blockchain, artificial intelligence, and decentralized finance. Historically, assets that faced skepticism in their early days, whether it was the internet, mobile technology, or Bitcoin, have turned out to be some of the best investment opportunities. Yusko advises investors to be contrarian, embracing innovations that the mainstream initially dismisses. Please like and subscribe.